You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
The mining market is very frothy right now. There is a lot of money pouring into it. There's almost a mania in terms of get into deals, to get into opportunities that I haven't seen, at least in the last 2 or 3 years that we've been doing this, but really in the last 10 years. And there is a very good chance, I believe, in the short term that we're going to see a pullback on these stocks. We're going to see, I guess, this mania, as I've been calling it, calm down and the share prices to fall back.
This is Mining Stock Education, and I'm your host, Bill Powers. Thank you for tuning in. I'm speaking today with Jamie Keech of Resource Insider. Website is resource-insider.com. I'll also put a link in the show notes below if you want to click that and go check out what Jamie has to offer. He has a deal-making service that he provides to accredited investors where he brings them access to deals, private placements, usually with warrants that they would not otherwise have access to. Jamie also writes a newsletter. He's an investor and entrepreneur in the mining sector, so I asked him to come on to share his insights about what's going on in the mining sector right now. With that being said, Jamie, thank you again for joining me.
Yeah, Bill, thanks for having me.
You have a big win recently with Vizsla Resources, and you did one of your documentaries on YouTube regarding that project. So was that luck or superior investing insights at work with this successful investment?
Well, my first answer has to be it comes down to pure genius on our part, Bill. But no, there's a bit more to it than that. So I guess the question you're asking is did we know this was going to happen? Was this, a deliberate investment, or was it luck? And I would say, the truthful answer to that is both. It's both. For the most part, commonly to succeed in exploration takes an element of luck being on your side, right? You're drilling these properties, especially a company like Vizsla. It is a drill play. They're looking to make a new discovery. They, by the very nature of it, they're exploring something that's unknown, and they're using the drill bit to answer that question. So they have to get lucky and find the thing that they're looking for. However, the thesis by which they went after this, the geological thesis, the work program that they'd put in place to systematically explore the Panuco district where they're based in Sinaloa, Mexico, and then of course the management team's ability to deliver on that. This was all very, very thought out on our part as investors, and of course even more so on their part as the company and the management behind that company. So it kind of comes to that, that old saying. It's like luck is what preparation meets opportunity, and they prepared well, they did everything right, and the thesis played out. So does that answer the question? It's a combination of the two, I believe.
That does, and I'd like to ask you about another investment you did over a year ago into Northern Vertex. We did a webcast together with this company about a year ago. The share price has been performing well as of recent. Do you have any updated commentary on this investment?
I mean, Northern Vertex took off last week, so we came in at 24 cents, and I think that was about a year and a half ago, and now it's at 43 cents. And this was one of our, believe it or not, has been one of our worst performing investments we've done. And it's been very frustrating for me over the last year because the guys at Northern Vertex have been doing a great job. They were well financed. They sorted out a tremendous number of problems on site. They expanded their permitting. They updated their team. They did everything right. They increased production month over month over month, and the market did not pay attention at all. And it was highly frustrating to see, frankly, some very, very subpar companies, exploding over the last few months in a good way in terms of the share price going up, and Northern Vertex kind of just plodding along business as usual. But they released their latest quarterly results about a week ago. They had some really, really good numbers there, really showed the progress they've done, and the market has really woken up to this, and the share price has risen to reflect that. So I guess I'll just echo that I'm very happy with it. I think it's a long time coming and very well deserved on the behalf of the company.
What about private placements in the money, Jamie? When you see a private placement that is offered deep in the money as an investor, accredited investor, what is your initial reaction to a placement like this?
Awesome. That's my okay. simply that is my reaction. I like to see that right now. Frankly, we just did one. It's very similar to that. We invested in a company that was trading around $2. We came in for $1 with a half warrant. We're looking at several more. Well, frankly, I'm looking at 3 of those that we're going to be doing over the next 6 weeks as well. So the answer is, why do I like that? The mining market is very frothy right now. There is a lot of money pouring into it. There's almost a mania in terms to get into deals, to get into opportunities that I haven't seen, at least in the last 2 or 3 years that we've been doing this, but really in the last 10 years. And there is a very good chance, I believe, in the short term, that we're going to see a pullback on these stocks. We're going to see, I guess, this mania, as I've been calling it, calm down and the share prices to fall back. I think that will be a short-term pullback. I'm very, very bullish on how these companies perform over the next year, but I am cognizant that that's a real possibility. And there's been a lot of money piling into this space, and there's a lot of deals that are getting done at high valuations that would not have been able to get done even 6 months ago, certainly not 2 years ago. And I expect that we're going to see, in the short term, a pullback. We're going to see some of the mania of people piling into these stocks sort of cool off a bit, and we're going to see a lot of these share prices correct and drop down. I do think this will be a short-term thing. I'm very, very bullish on sort of the long-term case of the junior mining space, particularly over the next 2 years. But what we're trying to do is, getting into these stocks, we want to give ourselves a buffer zone so that if this pullback occurs, even if it drops by 50%, we're still in the money. There's still a lot of chance for us to both retain and build value there. So we're looking for steep discounts, and we're looking for warrants or half warrants to really increase the value of that upside. And we've got 3 of these that we're really lined up to do over the next probably 6 weeks.
We'll be right back after this word from our sponsor. Oren Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Oren's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Oren has been called one of the best in the junior exploration sector. Oren trades on the TSX and NYSE under the ticker AUG. To learn more, go to OrenResources.com. That's AURYN Resources.com. With your approach, and I know it can vary in investment by investment, but would you often, after the 4-month hold comes off, sell your initial capital, keep the warrants, and put it into the next deal?
So the answer to that is maybe. We have never sold strictly after a 4-month hold. It really, really depends what the company is doing. If they're out there exploring, drilling, getting good results, we hold it. If I'm concerned about their ability to deliver, I would certainly be willing to sell and happy to sell if I thought that was the best course of action for myself and to our subscribers, who we always disclose what we're going to do before we do.
I had a recent guest on this show, and he said that if a junior miner can't finance now, they either don't have a good project or a good management team. Would you go so far as to agree with him on that?
I kind of agree with that, but I would say there is an exception to that there are a lot of good projects and good management teams who are not particularly capital market savvy. And this is an issue and something we're certainly very cognizant of before we invest in anyone. But there are teams that don't really know where to go and get money. I know a lot of these CEOs that are engineers or geologists and have a great, strong technical background, but they're not as savvy at connecting to the market. So that has its own challenges, but it doesn't mean that everyone that is not, raising tons and tons of money right now is an idiot. There is some middle ground there.
Just from an outside perspective, when you were sharing about these private placements you're doing at a discount, that was my question is, are these management teams perhaps not so savvy or not so concerned about dilution? I mean, in these cases, without naming names, why are they offering it at such a discount to the market value?
All right. Well, I would say there's an element amongst these management teams of sort of strike while the iron is hot. They're all very aware that money is readily available right now. And I think they're willing to take a bit of a hit to get it in the door. And, there are these steep discounts, but often, even at a significant discount, it's still way, way above where they were trading even 2 or 3 months ago. So for them and for their existing shareholders, this is still a big win bringing it in at that price. So I think they're willing to take a bit more dilution than normal to get that money in, under the fear that perhaps that money won't be available to the same degree in 6 months from now or in 12 months from now. And I think that, that's a reasonable fear for these junior mining CEOs to have, because many of them have been working away at these projects for the last 5, sometimes 10 years, and it's been so hard to raise capital. A lot of them are jumping on the opportunity while they have it.
So, Jamie, you've interviewed in your podcast, and if my listeners aren't familiar, Jamie hosts the Resource Insider podcast, and he also posts his interviews on YouTube. I would encourage you to go check that out and subscribe. You've interviewed people that are part of investment groups within the resource sector, the Oxygen Capital Group, the Discovery Group. There's also the Grasso Group. These groups obviously have some advantages in that they can pull resources together. Typically, with shared services, they can have lower G&A costs. But as you analyze these groups and the pros and the cons, what would be some of the cons of investing in a company that's associated with one of these groups?
Yeah, I'll start by saying, on the whole, I'm very pro these groups. I think very often many mining projects, they're overstaffed. They have too big a management team, and G&A takes up too much of their budget. So these groups are a really good solution to that, where you can share sort of a back office of corporate secretaries and CFOs and maybe a geologist that is sort of overseeing things from an office. There's all sorts of synergies that can occur here. However, I would say the risk you run is sort of dilution of talent, right? If you've got sort of a star management team and maybe one guy is the chairman of all the companies or something like that, the issue is more and more of his team time and his team's time will automatically be drawn to the best, or at least the most popular companies in their portfolio. That's just the nature of it. Obviously, when someone's getting great results and pulling out great drill holes and the share price is running, that's the exciting deal in the portfolio, and that's where everyone's going to want to be focusing. So the downside, or the potential downside, is that the lesser deals or the less exciting deals, they get resources sucked out of them. And if you're the guy that happened to invest in one of those other ones, you're kind of getting the short end of the stick there in terms of allocation of resources. I just recently talked to Jim Patterson about this from the Discovery Group, and he made the very good point that each one of these deals has to be able to stand on its own. It has to have the quality of assets, and it has to have the quality of CEO that make it really an independent force within the group. And some groups do that very, very well, and others do that less well. And you want to be ensuring that if you're investing in a quote unquote group, you're investing in either their star assets or that they have a reputation for really only having great projects and great companies in their portfolio.
When it comes to jurisdictional risk, if you're looking at not a first tier or even second tier jurisdiction, but maybe a third tier jurisdiction that has a really phenomenal project or excellent management team, would the quality of the project and the team cause you to overcome your objection to investing in a third tier jurisdiction?
Bill, it kind of feels like to me that everywhere in the world is a third tier jurisdiction right now. I look at the United States right now, and I don't think it's a third tier jurisdiction, but I think there are real challenges with things getting locked down potentially and limited freedom of movement and choice and all these things. So to answer your question, yes, I would certainly be willing to consider, more challenging jurisdictions if they have the right team in place. And what I mean by the right team in place is, frankly, someone that has succeeded in that environment before. If I invest in a management team in, West Africa, or a challenging country rather in say Latin America, if the CEO has already pulled off a deal there or maybe in the neighboring jurisdiction, I'm going to have a lot more faith than some guy who spent his entire career working in Nevada all of a sudden going and staking ground down in Argentina. That's going to cause me a bit of cause for concern.
What's the easiest way for a non-technical, non-accredited retail investor to make money in the mining sector right now?
So I'd say there are two options that the average person has, okay? If you're not an accredited investor, if you can't buy my newsletter, which I obviously highly recommend, I would say you either, one, want to be paying for help, or two, you want to be making obvious choices. So let's start with paying for help. There are several great newsletters available that cater to retail investors and can make great, well thought out stock picks. There are also several great mining brokers. We work with one of them. His name's Bernie DeGroot at Canaccord, who have great deal flow and have great opinions to offer on companies, and they can be a tremendous amount of help to their clients and subscribers. You know, I think the challenge that a lot of investors fall into, and this is obviously non-technical, non-financial resource investors, but also, you know, people who actually work in this space, is they don't know what they don't know. It's very easy to get caught up in the hype of things. It's very easy to overestimate your ability to evaluate something or your expertise. I mean, we're very careful of that at Resource Insider. When we're looking at a certain deposit type, I make sure I bring in and consult to the geologists that are expert at that deposit type or expert in that part of the world. So it's very easy to overestimate your ability to recognize challenges in these places and in these projects, and it's a trap that many people fall into. So I would say if you're unexperienced in this, or even if you're moderately experienced, highly recommend you build the right team around you, whether it's newsletters or brokers or contacts of some sort, or using free resources like your podcast, like my podcast, that helps, you know, provide information on different companies and different CEOs and strategies. The second option is just, you know, do the obvious, right? You don't need to, if you're not very, very serious about resource investing, you don't need to try to eke out every inch of value. You can buy the companies that are going to perform well in a good market. I mean, that starts with buying an ETF to get exposure to the junior gold mining space. And then I would say, you know, buy the platinum investments, not the platinum metal, but the top tier investments, the Sandstorm Golds, the Equinox Golds, Silver Wheaton, Barrick, things like this, that we know those companies are still going to be there in 6 months or 6 years from now. We know they're managed by highly competent teams. They have a track record of success, and they have a track record of going up in good markets. And for the average investor, that's going to get you 90% of where you want to be.
And you'll definitely not lose money that way, or less likely to lose money.
You'll definitely lose less money that way. How about we say it like that?
Yeah, fair enough.
Right? Barrick's not going to zero. You know, that's the reality. And it's easy to find a junior company that will go to zero.
Well, outside of gold, you're very bullish on the precious metals, as am I, and as I would assume most of my listeners are. But other than gold and silver, any commodities that have your attention right now?
Copper. Copper is the bedrock element of the entire world. Everything that we use and everything of any value is made with copper. And it has had a little bit of a run lately. And I think in the next 18 months, copper is going to really, really come into its own. There are a lot of things happening in the world that I think will spark that. You know, none more so than these stimulus packages that we're likely to see coming out of COVID-19, when we're going to see the U.S. start churning out infrastructure and things like that. So that's one of the reasons I'm very bullish on copper. You know, like when we look at the TSXV, if you're looking at investing in these junior companies, about 70% of all junior companies are gold companies. And then almost 20% of the rest, or 20% is copper companies. And then the rest, maybe less than 10% is everything else, the lithiums, the cobalts, the et cetera, et cetera, et cetera. So after precious metals, copper is where you'll really want to find yourself. It's hard to find great copper assets in small companies. There are a few out there. The one that I'm primarily invested in is Solaris Copper. I've been along that for a long time. Just recently went public. It's run by a great team. It was built by a lot of the people that I've worked with on a regular basis. It spun out of Equinox, where I used to work, as some of your listeners might know. So that's what I liked right now, but we're looking at a lot of other things as well.
Jamie, before you go, what type of feedback have you been getting from your subscribers?
I mean, Bill, we're up about 125% since inception. We post online our returns of, I think, the 12, 13 deals we've done. Only one of them is not up significantly, and I suspect that's going to change very drastically over the coming 2 months. So suffice it to say, our members are very happy. I think I did the math. I did do the math, and I think we have made people somewhere on the order of $15 to $16 million over the last 2 years. So happy days for our members. It's obviously been a very good market over the last, call it 3 or 4 months, but we've outperformed it, and I plan on keep doing that. So yeah, good times for us.
Mm-hmm. And I recently referred a high net worth friend of mine to Jamie's service, and I know that he's already invested in at least one of Jamie's deals, so I have referred a personal friend. Anything more that listeners should know about what you offer over there at resource-insider.com?
I would just say, if you're an accredited investor, if you're looking to allocate a significant amount of capital into the mining, gold, natural resource space over the next 2 to 3 years, reach out to me. We can give you an in-depth overview of everything we do, how we make decisions, and show you why we've been able to perform so well.
Excellent. Website again is resource-insider.com. Jamie, thanks for coming on today's show.
Bill, thanks for having me. Always a pleasure.